Hey, good morning, everybody. Welcome to Monday, July 22nd. As we get ready to speak with Dave, just want to remind you that as we produce this every day, or almost every day anyway, if you'll like and share this with your friends and neighbors, I'd really appreciate it. And then don't forget, as we get started today, I want to talk a little bit about our free report on retirement planning and making sure you've got the right strategies in place the closer you get to retirement. So folks, listen, if you are 5 to 10 years out from retirement or you are already retired, then this is a very important report for you. Retirement strategies, all you have to do is text the word retirement to 863-285-3815. You know, retirement's one thing. We really don't get a do-over. You need to make sure you get it right the first time. This is a must-have report. Go right now to your phone, text 863-285-3815. Text the word retirement, or on Facebook, find the link right above this post, click it, and request your free report. Dave will be with us in just a moment.
Matchbox 20s there. We're at 8:38 now. That be 22 before 9. Time to check in on your money and see what's happening on Wall Street. It was an interesting week last week. We kind of got used to going straight up. Last week was not so hot. Let's find out what's going on. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Hey, good, Dave. Doing well. I had a great day of training on Friday. And so it's good to be back in the seat this morning to talk about what's happening in the marketplace.
Glad to have you back. Friday was an interesting day. I was kind of optimistic when it started out, and we ended up running out of steam again. We were talking before we went on the air that we're getting to that warring expectations mode on Wall Street, and enough of the traders are actually optimistic that the Federal Reserve will bow to all the political pressure and give us a 0.5% rate cut on the interest rates next week. A little bit of doubt that was going to happen got, filtered through the exchanges on Friday, and all of a sudden we started selling like chiclets again. I mean, it wasn't a disgustingly bad day on its own right, but it gave us a down week after a big run-up for the last couple of months.
Well, it did, and it was, you're right, it wasn't too bad of a day really on Friday. I mean, it was, we say losses were less than 1%. However, if we look at the week, it was really the worst week since May that we've seen on all the major indexes.
It was an off week without a doubt. There were, we go one step forward and two steps back all week. Got to keep for perspective. We're up some obscene percentage amount since the first part of May. So, okay, fine. What goes up has to go down. You just hope it doesn't go down as far as it went up, right?
Well, that's right. I mean, that's the whole idea. And let's face it, 2019 has been a pretty good year after coming off of a pretty lousy fourth quarter of 2018.
That's true. We've kind of instituted a recovery of some sort from the sell-off we had at the end of the year. Always the warning that we always put in when we start sounding really, really bullish, the fact that we're overdue for a recession or some sort of a setback is darned hard to deny, but it looks like today we're getting a little bit of the optimism back again so far. Is that based on the earnings, based upon the gossip, or based upon some reality? What do you think?
I think it's some hopefulness in the earnings. This is a huge week when it comes to earnings, Dave. I'm looking at my numbers, and there's like over 50 today, over 100 tomorrow, almost 200 on Wednesday, almost 300 on Thursday, and then back to about 60 on Friday. So that's a lot of earnings coming out. And I think the optimism is that we're going to see some beats when it comes to earnings season, even though everybody last quarter was given the kind of, hey, don't expect too much the rest of the year from us.
And I think the financials probably gave us a little optimism on that front. Yes, we had some zits on the picture that some of the financials had, so their stocks didn't go up that much. But most of the financial issues that we saw as we started earnings season last week, they were beating the street in terms of their bottom line. They just got beat up by investors, by some of the other macros investors were looking at specifically to their industry. So we've got at least an optimistic tone to beginning earnings season. Wouldn't you agree?
Well, I think so. It definitely looks that way, but I think it also shows that the analysts and the traders are looking more at some specific key indicators to determine whether or not to buy that stock or sell that stock and those type of things. So the other thing I'm looking at, Dave, I mean, we talked about how many earnings we got coming out this week, and it's a huge number. So I was also looking at kind of the economic things. What on the macro side do we have to look forward to this week? And it's just not much. So that tells me there's going to be a lot of earnings-driven stuff this week. Now, I will say that I think I'm interested in Friday, Dave. Friday, we had the first advanced reading of the second quarter GDP.
And that's always a market mover because the expectations start getting locked in for 48, 72 hours beforehand. And if they miss, it moves the market. I was kind of noticing we got kind of the routine plethora of housing and mortgage reports, which given the middle of the week and the fact that we've got a bunch of stocks also reporting, it could confirm or deny what we saw out of the financials last week.
Well, that's true. I mean, because we got existing home sales that I think comes out tomorrow. And then we don't have much. I mean, we got the new home sales. So it's a lot of real estate coming out this week, which could be a telltale sign of what the economics look like going forward.
Understood. It's going to be, you're absolutely right. I agree. It's going to be an earnings driven week before we start turning our obsession toward the Federal Reserve and their meeting next week. Talking about the different issues that are reporting, let's start out with the big loser of the bunch, because we've always made fun of the old sock puppet thing during the internet boom that pets.com just completely cratered in. Somebody tried to sell pet medicines over the web, Pet Med Express. It's probably an ongoing business, but they didn't have a fun quarter, did they?
No, they really didn't. They missed across the board. You know, their average order fell from $90 to $86 from a year ago. They were expected to come in at about 42 cents a share. They came in at 26 cents a share, so that's a pretty big miss. And to give you a comparison, they earned 62 cents a share last year, this same quarter. So a real big miss when you compare it to last year. And they're trading down this morning, getting close to 6.5%.
Youch, that kind of smarts. It does kind of underscore the fact that, you know, it's a brave new world and we're still feeling our way trying to figure out how to make a buck in the new model for retail. And some internet businesses are just narrow enough. Some may be a little bit narrow so that they end up getting beat up by the vagaries of market changes and conditions, don't they?
Yeah. And I got another big miss for you too, Dave. Lennox, you know, the air conditioner maker, the Lennox International, they had some adverse weather conditions. I'm not sure, maybe that was during the second quarter, because this year, in this quarter, they should be ramping it up with all the heat waves coming through. But they were expected to come in at about $4.12 a share, and they only came in at $3.74 a share. So they're trading down about 5% this morning.
Did they show year over year? Because I kind of half expect the second quarter to be kind of a gray area for an air conditioning and heating manufacturer. Did you see year over year on that?
Well, I didn't. I'm going to see if I can look through the numbers real quick here. I see revenue fell 6% from the same time last year. So that's so revenue missed also. Compared to last year. It doesn't really tell me what the impact weather was that they're looking for.
Okay. Yeah, I was kind of thinking just the second quarter, I kind of expect to be an off quarter, but your point's taken. As hot as it's been up north, I would expect this to be a barn burner quarter, especially for one of the granddaddies of them all in terms of the HVAC business. Other stuff of interest so far.
So I've got two more to lead with, and that's Halliburton. You know, the big, they do oil field stuff. They're just a huge company. They beat by 5 cents a share. Came in at 35 cents a share. Revenue was a little below what was forecasted. But Halliburton said they were pleased with the quarter. They're upbeat on their international growth possibilities, and they were happy with the way they were able to kind of manage their North American market dynamics. And they're trading up a little over 1.8% this morning before we get cranking. And then the last one I have, the big egg producer, Cal-Maine Foods. They are the number one nation's largest egg producer. They did not have a very good quarter. They lost 41 cents a share this is their fiscal fourth quarter. That was 7 cents worse than what was expected. Revenue also fell short. The company said it's been a challenging market conditions this last quarter, and they're trading down about 7.2% this morning.
Ooh, I gotta wonder whether or not that line of work is kind of going against the flow in terms of the trend of healthy eating, given the legend of eggs and cholesterol and all of that.
Well, but if you think about it, Dave, really it's going the opposite direction now, because those people that are on keto diets and low carb are focusing more on eating eggs.
Well, that's a thought. Yeah, I have never had any hesitation with eggs, but then again, I've got a low cholesterol count and don't watch it that much. I guess I didn't know whether we were swimming upstream with that line of work or not.
It could be, but I think sometimes I remember seeing a report somewhere last quarter about it may not have been eggs, but it was about chickens. The heat was really giving the chickens a hard time.
And my farmer friends up north will say, yeah, during a hot spell, the chickens don't lay very well. So that is a legitimate thing, isn't it?
Yeah, it is. I think so. So that could be part of the market condition issue too.
Valid conditions. So setting the table for this morning, Friday, was an off day. Like we said, the week was a bad week, but the day itself was not good. Dow was down 68 points on Friday afternoon. NASDAQ lost almost 61. That was the big loser of the bunch. And the Standard & Poor's were down 18.5 points. Like I said, a red day, but not a catastrophically red one. 45 minutes before we open up this morning, Phillip, are we looking at green ink so far today?
We are, Dave. We're looking at a little bit of a rebound. The Dow's up 62 points, and the S&P 500 is up a little over $9, and the NASDAQ's up 36. So the NASDAQ's the best. It's almost up 0.5%. Gold and silver both up. Silver's up 1.2%, up to $16.39 an ounce. A pretty big bump there. And then we got crude oil up 1.3% to $56.30 a barrel.
That's pretty close to where it was, though, on Friday morning when I checked. So I got a hunch we're back into our normal trading range in the mid-50s, and I cross your fingers we stay stable there.
Yeah, that would be nice. I mean, I saw a few things about oil over the weekend about tankers and stuff, but it doesn't seem to be affecting it a huge amount.
Yeah, the British tankers that got captured by Iran are upsetting as all get out. I expected a bigger spike on light crude than we're actually seeing this morning. World markets, Asia generally off on trade rumors and progress on a trade agreement with China. Europe generally trading up midway through their day today. Phillip, somebody needs some advice as far as ensuring one's retirement against the ups and downs we talk about every morning. How do I get a hold of you to set an appointment?
They then give us a report to help them coach them through retirement by give us a call at 382-0037 and get scheduled for a free financial x-ray analysis of your current portfolio. And then we've also still have our retirement strategies report, free report. All you have to do is text the word retirement to 863-285-3815. And then, of course, join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
And that streams on newstalk730am.com, just like we do here every morning at 1057lightfm.com. Phillip, thank you very much. We'll catch you in the morning, all right?
All right, buddy. Thanks. You two have a great day, and I look forward to tomorrow.
Gotcha. Thank you so much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Don't forget about our free report on retirement strategies. Text the word retirement, 863-285-3815, or on Facebook, check the link right above this video, and it'll take you right to the right page to request your free report. Hey guys, thanks for joining us again. I look forward to speaking to you again tomorrow. Have a great day.